Hello, folks, and welcome to SAC's Recovery Webinar, Loan Options and Forgiveness Strategies. Today is February 4th, 2021. Beautiful, clear day here in where we are, a lot of snow. Powered by SACSLLP.com, SACS Wealth Advisors, and S2 Solutions, which is our technology group. And this is the slide in which we have to tell you to just pay attention, because this webinar is presented for general guidance only and does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. So what does that mean? It means before you take any action, you should consult a professional advisor who has been provided with all the pertinent facts relevant to your particular situation. And of course, we are here to help you with that. So let's talk about CPE. If you are looking for CPE from this particular webinar, keep in mind, and I'm going in no particular order, first, that you actually stay on for at least 50 minutes or the entire webinar for 50 minutes, that you pay attention. We do know when you have put something on your computer just to click it away, and also that you answer 3 out of the 4 polling questions, and finally that you do submit the CPE evaluation form, which you'll see in the side panel as a handout. So please do all 4 of those items and you will get CPE. Okay, here's our illustrious panel of presenters today, myself, Todd, Josh, and Steve Ehrenberg. We're going to be presenting, but also just want you to know, we also have other members of our task force that you see here, Angelo, Melissa, Amanda, Julia, and Matt, who've been working really hard to get those applications in for forgiveness for you folks. So what are we going to talk about today? Today's agenda, I'm covering the introduction right now. We're going to be speaking about the Shuttered Venue Operations Grant, the PPP financial statement considerations, the SBA action, which includes frequently asked questions, the revised PPP loan forgiveness forms, the PPP procedural guidance, and also the PPP loan applications and stats. And finally, what you've been all waiting for, we answer your questions. And we did select a number of your questions. If we miss a question, we're happy to answer them at another time or directly with you if you like. So let's start with polling question number 1, and I think you'll see the theme of this webinar. How many Super Bowl victories did Joe Namath, Broadway Joe, win in his career? Is it 3, 2, 1, or who is Joe Namath? So opening the polls right now and make your selections as to how many Super Bowl victories did Joe Namath, Broadway Joe, win in his career? 3, 2, 1, or who is Joe Namath? And I'm watching you all vote right now, and I will be closing out when I count down from 5. So I'll give you a few more seconds. All right, I'm counting down. 5, 4, 3, 2, 1. And most of you got the answer correct. Super Bowl victories for Broadway Joe, only 1. Okay, I'm going to turn over this section now to my partner Steve. The Shuttered Venue Operations Grant. Take it away, Steve.
Thanks, Todd. I hope everyone's doing well out there. As a Jet fan, it pains me to see that was our one and only Super Bowl, but hopefully better things to come. In any event, Just wanted to talk to you all about the Shuttered Venue Operators Grant. While the SBA is not yet accepting applications, we do expect a portal to open shortly. So we just wanted to remind eligible businesses as to what's out there. First of all, it was established by the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act, which is part of the Consolidated Appropriations Act that was released in late December of 2020. We list here the eligible entities. These are your movie theaters, museum operators, motion picture theater, theatrical producers, just other live venue operators and promoters. So there's a number of entities, eligible entities out there, and fully knowing that these entities are especially hard hit due to the COVID pandemic situation, whereby people just can't go to these venues at the moment. And as you see, there's a $15 billion grant program, and applications will go through the SBA. So on the next slide, we talk about the grant amount, and it basically is dependent upon when the entity was in operation. So if you're in operation on the 1st of 2019, then it's the lesser of 45% of your 2019 gross earned revenue, or 10 million. Whereas if you began operation after that date, it's the lesser of 6 times your average monthly gross revenue for each month in 2019, or 10 million. And you see here the grants are prioritized, and right now there's only 15 billion, in funds allotted to that. We'll see if they do increase it, but we see here that first, second, and third priority are dependent upon the economic loss that the applicant has suffered between April 2020 and December 2020. And then there will be supplemental funding potentially if there are funds that are available. So if this is something that impacts you and you do fit in that criteria, I would recommend that you really focus on this, because the funds appear to be limited. But again, we'll see if they put more money into the program. So, and here's a listing of what the funds may be used for, and we're not going to go through everything. The deck will be available afterwards, and you can look through it. But you see it's similar to what was available for PPP in terms of payroll, rent, utilities. There's mortgage payments, PPE, other types of ordinary necessary business expenditures, insurance payment, operating leases, whatnot. But the next slide is more telling in that it says what you can't use it for. You can't use it to purchase real estate, make investments or loan, make payments on loans originated after the 15th of February of last year, make political contributions, and any other uses that the administrator so produces. So we'll see if when additional rules come out, if there are additional restrictions on the funds that you can use. And if you do apply, you have to keep your record for 4 years following the receipt of the grant, and other records 3 years from the date of receipt of the grant. So something to keep in mind as well. And lastly, because this is a webinar focused on PPP, and for the most part, just know that entities that applied for a first draw or second draw PPP loan on or after the 27th of December last year will not be eligible. So you see here that the SBA released FAQs about a week ago. This link is hot, so when you do get the deck, you can click on that link, or you can just paste that that address into your browser and pull it up. And they will be updated, so hopefully once we see new information, we'll make you aware that it is out there. So now I'm going to turn it over to my partner, Josh, where he'll discuss the financial statement considerations associated with PPP loans. Josh?
Hey, thanks, Steve. Good morning, everybody. So nothing has changed with respect to financial statement considerations, but it was something that we continue to get some questions on, so we wanted to revisit those considerations with you. There are two clear paths, essentially, as to how you present the PPP loan. So we're going to go through those over the next two slides. So the first one is under Accounting Standards Codification 470. This is the more conservative approach, and it's accounting for the PPP loan as debt. So, as you would account for traditional debt, you would accrue interest on the loan, and the loan would remain recorded as a liability until either the loan is in whole or partially forgiven, right? Or meaning it's been legally released. For those of you who have received forgiveness already on your first loan, you know that a letter does come to you from the SBA, essentially, relieving you of this obligation, or the debtor decides to pay off the loan to the bank. So once the loan is in part or wholly forgiven, and like we said, this release is received, then you would reduce the liability and record a gain on extinguishment. We're seeing it in the financial statements as an other income, gain on extinguishment of PPP loan. That's typically how we've been reporting it, and others as well. So the other option for accounting for the loan is to treat it as a conditional government grant, and this falls under ASC 958 or the International Accounting Standards IAS 20. And essentially what you do here is that if the entity expects with some certainty to meet the criteria for loan forgiveness, the loan may be accounted for as a grant with a condition. So essentially, if you go back and you look at your debits and credits as to how this thing shakes out, when the loan comes in, right, you debit cash, you would credit deferred income, and then as the money is spent down appropriately, certainly the money's coming out of cash, it's paying expenses, you would start to recognize that revenue as the expenses are concerned. As the expenses are expended. So that is the other that is the other option. Again, I think it's important to look at everybody's own scenario and account for the PPP loan as you desire, based on the conversations we've had with banks in terms of covenants and looking at year-end numbers. I would expect them to exclude this PPP loan, whether it is on the balance sheet as a loan or in the income statement as income from any of your covenants. So I think especially as we come to year end and you think you may be close, I think it's important to have a conversation with your banker as to how they will be calculating the covenants for 2020, so that if waivers are needed, then you're able to start that process sooner than later. Okay, I'm going to turn it back to Steve, who's going to go through SBA action. Go ahead, Steve.
Thanks, Josh. Okay, so since we met with you last, it was about 3-4 weeks ago, there's been a lot of SBA actions that have taken place. So we're just going to summarize some of that information so that you have it in kind of a one-stop shop. If you look in our handout section, there's some information in there as well, which we'll discuss as we get to it. But first of all, back in the second or third week of January, around the 19th, the SBA issued 2 FAQs, both of which you'll see in our, as I said, in our handout section. It says SBA first draw and second draw FAQs. So the first one is entitled How to Calculate Maximum Loan Amounts for First Draw PPP Loans and what documentation to provide by business type. And I just want to emphasize that these are not the law, but they can be a good reference point for borrowers. So just keep that in mind. And this really just provides a good way for you to learn how to calculate your loan amount. And certainly we can help you with this, but if you happen to be doing it on your own or trying to get an estimate, then it provides information by partnership, corp, nonprofits, including religious organizations, farmers and ranchers. And it really just kind of goes through the rules and provides numerical examples. It's about 18 pages of information in there in terms of this actual FAQ. It talks about the $100,000 cap on cash, how to also, you can include on top of that your health care and similar benefits, retirement benefits, how you can, which state and local taxes to include, and how, if you received an EIDL loan, this was prior to, I think it was April 3rd, then how that impacts your loan balance. So there's also information about the documentation requirements in terms of what you're required to provide to the bank and what the SBA may be looking for. options for businesses that were in operation on the 15th of February 2020, but not in operation perhaps the year before in terms of measurement period, and again, how to calculate your loan amount. Confirmation of federal taxes. The max loan in these is 10 million, 20 million for your corporate group, which we include the definition below. It's basically a parent-subsidiary relationship. So just a really good resource that you can rely upon, and feel free to download that and reach out if you have any questions about that. In addition, and these are all included in the same PDF, but there's a document for second draw loans as well, in terms of how to calculate the revenue reduction and also the maximum loan amounts and the documentation that you need to provide. It basically confirms, and this is a question that we've received, that PPP loans and idle advances are excluded from gross receipts. It also provides the reference period for comparative purposes in terms of how you're calculating that 25% revenue reduction, especially for businesses that may not have been in operation for all of 2019. And again, it goes through the documentation requirements and what needs to be signed. I know that borrowers that were submitting PPP loans may have gotten initial rejections if they didn't actually sign the first page of the document and initial the others. So it just talks about that specific information. And also importantly, for borrowers with loans of 150,000 or less, you're not required to provide this revenue reduction documentation when you seek the loan, when you apply, but when you apply for forgiveness. So that's something to keep in mind as well if you don't want to go through the process of gathering that information right now, but would like to apply and still get that money in-house. And similar to the first round that I referenced earlier, this provides the maximum loan amount calculations by borrower type. And whereas the first round had a $10 million limit, the second round of PPP, second draw as we call it, has a $2 million maximum loan amount. And corporate groups, which we define on the prior slide, their loans may not exceed $4 million. So this is a 12-page document. So if you do download that, you should see around 30 pages in there. And it's really just an excellent resource that you can rely upon and reference when you do go through the process. So in addition to the FAQs, and this is something that a very hot topic, the SBA released new loan forgiveness application forms. The one that's received a lot of press, if you will, was the one-page simplified loan application form for loans of 150,000 or less. This was, I think, 80-some-odd% of the loans fit this range, maybe a little bit more. So rather than having to go through the whole process, it's a simplified form where you just basically include some additional information, payroll costs, how you spent the loan, and just some other information about your loan. And it's important to note that borrowers with loans of 50,000 or less are not subject to the FTE reductions and salary reductions. And a little hint of what's to come, Todd at the end is going to go through those. If you don't remember them, there's a lot of information there, so you're definitely going to want to stick through this webinar to the end. So they also released new Form 3508 EZs and 3508. And again, the main difference here being that they now have these additional expanded non-payroll costs, which you see listed at the bottom: covered operations expenditures, covered property damage costs, supplier costs, worker protection, so your PPE. So those are now eligible to be included in both first draw and second draw. But for first draw, you must not have already submitted for loan forgiveness if you are going to use these additional costs. But keep in mind that they are available. And we just want to emphasize that the 3508 EZ is really the form. If you're above the 150,000, the 3508 EZ is the one you're going to want to be looking at. Hopefully that can meet your needs. And then if you don't get to that one, you have the 3508, and that is in situations where you had a FTE and or salary reduction. And lastly, they issued the Form 3508D, which is for a very specified sect of the borrower group. It's basically a disclosure when a covered individual holds a controlling interest in the borrower. And the covered individual are essentially certain government officials that have a 20% interest, at least a 20% of voter value in the company. So this is president, members of Congress, vice president, and their spouse, and so on and so forth. So if that happens to meet your needs, again, let us know. You'll see in our handout section, we've included the revised loan forgiveness application forms as well, so you can download them there. The form 3508D is included in there if that does happen to impact you. So I just want to let you know that as well. So in moving on to the next slide, a number of different procedural guidance notifications have been issued, and we're going to go through those right now. A big one, initially, you'll see here the repeal of the EIDL advance. So basically, before the Consolidated Appropriations Act was released in December of 2020, the EIDL advances were subtracted from your forgiveness. So essentially, if you had received this EIDL advance, which was up to $10,000, then your forgiveness would be impacted by that. Well, lo and behold, the gift from the Congress, Treasury, and the SBA, they will no longer deduct the EIDL advances from forgiveness, so you can get both. And not to worry, if your forgiveness has already been reduced by this amount, the SBA will take action and will reimburse you for that amount. So if you haven't gotten it yet, there's no borrower action required, but if you do fit that situation, then contact your bank and also contact us. We can help you go through that. But going to go through the rest of these as well, but also again, pointing to our handout section, you see the document entitled SBA Procedural Guidance, where we have included all these. So in addition to the repeal of the EIDL advance, first draw PPP loans are eligible for increases for borrowers meeting the certain criteria listed below. Partnerships, when they had the rules when partnerships had initially applied were hazy in terms of how partner compensation was included in the loan, but now you are permitted to increase your loan. So definitely you're going to want to check that out. And if it's a situation, again, reach out to us, to your advisor, and we can help. Seasonal employers are now eligible to take advantage of any 12-week period between February 15th, 2019 and February 15th, 2020. Before it was limited to only certain dates, farmers and ranchers. And then you see here 3 criteria for borrowers that fully repaid their first draw PPP loan because they didn't think they may not have been eligible, returned a part, or rejected it. So if you had gone through that and ultimately found that you were indeed eligible, there are means for you to go back and get your first draw loan. Okay, on to the next slide. So for borrowers who received excess loans, the steps, despite a good faith effort, that you did receive an excess, there are means for you to return that as well. And lastly on this page anyway, for resubmissions of Form 3508S, as well as lender offsets. But the crux of this one is that if you had submitted under the 3508EZ or 3508, but were eligible to use the 3508S, provided the SBA hasn't already rendered its final forgiveness decision or remitted payment, then you are eligible to resubmit using the 3508S, which again, as we mentioned earlier, is a simplified form. There are also some steps in here for lenders in terms of how they notify borrowers if the loan forgiveness is denied, and then the SBA loan review decision steps. We haven't gotten to the point, at least to our knowledge, where borrowers are starting to get audited, but it could happen. So something you're going to want to focus on if you think this situation needs. Okay, and the last procedural guidance we have here, which just came out fairly recently, was that essentially the 1099 and 1098 requirements associated with the Section 112 payments. And what these are, there are certain SBA loans, 7A loans, 504, and micro loans. The Consolidated Appropriations Act essentially said that these loans, similar to PPP loans and EIDL advances, would not be included, the payments that the SBA makes would not be included in the gross income of the borrower, but the borrowers are allowed to deduct those expenses. And do keep in mind, this is for federal purposes. The states the states could treat these things differently. So just we'll want to keep that in mind as well. But because those are excluded from gross income, the lender, or they're not required to send you a 1099 miss. So you're not going to get anything that says it's been excluded. So so that's good. And then also the interest payments, because the expenses are deductible, the interest payments will be included on the Form 1098. So you'll know that you won't have a mismatch between what you deducted on your return and the 1098. They should match up. So if this impacts you, you're going to want to pay attention to that, because this notice came out in the end of January, and it is possible that you received the Form 1098 before that. So definitely take a look at that and make sure those documents match up. Okay, so now I'm going to turn it back over to Todd for our next poll. Todd?
Thanks, Steve. Okay, so how much will a 30-second Super Bowl ad cost companies this year? Get ready to vote. Is it 5.6 million, 10.3 million, 3.4 million, or 1.2 million a second? So go to the polls. I'm watching to see who's voting. Is it 5.6, 10.3, 3.4, or 1.2 million a second? So if you could do math, take 1.2, multiply it by 30, and that would be the answer for that particular item. So keep on guessing. Some of you I know are Googling this. Those people are getting the numbers right, it would seem. 5.6, 10.3, 3.4, 1.2 million a second. Give you another few seconds. Okay, gonna count down. 5, 4, 3, 2, 1. And those who said 5.6 million, that is the correct answer for a 30-second Super Bowl ad. Okay, I'm going to turn this over now to my partner Josh to talk about PPP loan applications and statistics. Josh?
Thanks, Todd. Okay, so we're still getting questions about when do I apply for forgiveness? Does it affect? Do I need to apply for the first round in order to? Do I need to apply for forgiveness for PPP1 in order to get PPP2? And we just want to preach patience, as patience, 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 right? So the SBA is still taking steps to smooth the first draw loan forgiveness process, as well as the second draw loan application approval process. You'll see some of the banks have even to this point kind of shut down their forgiveness portal while they focus on the applications. We do expect the loan approval process will likely take additional time as compared to 2020. Initially, the thought was the money was going to shoot right out, and that seems to be a little bit slowed down. The SBA verification process is causing delays. I've heard a number of loans kind of get put in the queue because it looks like they've been applied for with multiple lenders, when in fact, the company has only gone forward with one. And there's still some unclear rationale behind non-approval. So some loans are being outright denied for we're not really sure. So there seems to be some kinks still to be ironed out. The SBA did host a national call with lenders to assist with resolution of the first draw PPP loans, and holds on the second draw PPP loan approval. Some lenders, as I mentioned before, have suspended forgiveness applications at this time to really focus on getting the new money out. And also, too, the ABA issued a letter to the Treasury and the SBA to address issues that have arisen. Just so everybody knows, again, inability for lenders to submit second draw loan applications for borrowers that have first draw loan applications pending with the SBA. These error messages are still happening with incorrect loan amounts, incorrect caps, and documentation requirements for 25% revenue reductions. That's one area where there doesn't seem to be a lot of consistency, especially when a company does not have an actual financial statement for the quarter for which they're presenting. So, and then just some statistics. These are on 2021 loans that have been disseminated. So overall for 2021, the average loan size has been 87,000, and to date, there's been approximately 35 billion of loans made by almost 4,500 lenders, and you can see some of the top ones listed here. So again, these are just on loans that have been made in 2021. This is nothing to do with 2020. So we had found that interesting, just wanted to share it with you. Todd, back to you for polling question number 3.
Polling question number 3. All right, this could probably be debated, but get ready to vote. What's the most popular Super Bowl party food? Pigs in a blanket, pizza, chicken wings, or nachos? Go to the polls and start your voting. Pigs in a blanket, pizza, chicken wings, or nachos. So I think we could probably argue on some of these, but I'm going to give you what the official answer is according to the mastermind of all masterminds, Google. So keep up your voting, see which is the right answer. Pigs in a blanket, pizza, chicken wings, or nachos. Give you a little bit more time to make sure all of you get a chance to vote, because you got to at least pick 3 polls, 3 out of the 4, in order to win a CPE credit. Okay, I'm going to count down 5, 4, 3, 2, 1. And most of you answered chicken wings, which was also what the mastermind Google said as well. And pizza and nachos kind of came in second and third. Okay, we're going to turn this section over to, actually it's going to be a potpourri, fancy name for the fact that all 3 of us are going to answer your questions, but I'm going to kick this off to Steve to start off with. What answers to questions are we giving you, Steve?
Thank you, Todd. And just to update everyone, on top of the ABA writing a letter to the SBA, the AICPA has also written a letter urging them to update the loan application system. So if you happen to have been denied for a reason that you don't understand, just again, back to what Josh said, be patient. But we try to give you the most up-to-date information available. This letter was actually sent yesterday at 10:30. So I wanted to inform you of that as well. First question here is, when do S corporations and partnerships include the tax-exempt income and basis? This is a question that we've received a number of inquiries about. And unfortunately, to answer this one, we don't know at this point. There's a lot of information out there. We're hoping to get some additional guidance. I think it really depends on a borrower by borrower situation. So this is one where you're going to want to consult internally, consult with your advisors, because there are several arguments that could be made as to, is it when you applied for forgiveness? Certainly if you've received forgiveness, I think that's a no-brainer. But if you haven't applied yet, and if your loan is above or below 2 million, there's several factors that will impact that. So definitely something we're gonna be paying attention to. We're hoping that the IRS issues some guidance in the state taxing authorities, but definitely something to focus on, and another reason to consider extending your tax returns until further guidance comes out.
Question 2, first draw PPP and idle advances are excluded from the definition of gross receipts for second draw PPP purposes. How about other CARES Act and similar grants? those are not excluded from the gross receipts definition. So again, you're going to take your gross revenue, you're going to take your gross receipts for the period which you choose, and you are only to exclude your PPP receipt and your idle advance. So again, that number up to the 10,000 for the idle grant, you do not, you would include your SBA idle loan. So don't exclude anything else.
I'm going to take number 3 and 4 together. I'm going to read them and then I'm going to give you the answer. Do I have to receive first draw loan forgiveness before applying for and or receiving a second draw loan? And the second question is, do I have to spend all first draw funds during the covered period in order to be eligible for a second draw loan? The answer to those questions are, first, you can apply for the second draw loan before you actually receive the loan forgiveness. So you can apply for it, but before you can actually draw down upon the second loan, you do need to actually have spent those first draw funds. So you do have to spend the first draw funds before you actually draw down on the second loan.
Okay, question 5. How do I measure economic uncertainty? And I just want to caveat this before I answer, is just because you may meet the requirements mechanically for the PPP loan too, meaning you meet that 25% reduction in a quarter, doesn't mean you should just apply. So I want to go back for a second to the good faith certification that we sign, that all the borrowers sign, just to start this answer. And that says, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Borrowers must make this certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. So we know that everybody's business is unique, and this applies to businesses in different ways. But similar to round 1, in round 2, we're still looking forward, right? And there could very much be restrictions in place that prevent you from operating, or your customers from operating. Or, we've spoken a lot in the manufacturing and distribution space, some of the issues currently with the supply chain, especially if goods are coming from overseas, and not only taking into account the production time, but also the costs now associated with getting the goods over here. So it is possible, that we'll be seeing margins continuing to shrink in the future. So like I said, this is really a case-by-case basis, and I think you need to consider that.
Okay, thank you. I will take number 6. Please explain the interaction between the PPP, Employee Retention Credits, and the Family First Coronavirus Relief Act and the relief options under there. The overall theme here is you can't essentially double dip or triple dip in this instance, but basically you cannot count the wages more than once. So if you're going to take the Family First Coronavirus Relief Act, then those wages would be excluded from the retention credit or the PPP. Now that doesn't mean you can't use the same employees depending upon how much in wages they receive. You just can't include the wages in each time you calculate your benefit. So if this does apply to you, it's something that we can assist you with, but just keep that in mind, that you essentially, while the employee itself is not mutually exclusive, the wages would be.
Okay, question 7. How do the affiliation rules impact the 25% revenue reduction requirement for second draw PPP loans? So I will say this, the way that the rules read is that you were supposed to calculate the 25% revenue reduction, including the revenue of all of your affiliates. However, and maybe this is some of the challenge that the banks are having processing the second loans, is, I don't know that this is being consistently applied throughout. But what I can tell you is that the affiliation rules are being very much considered in terms of head count, right? So now for PPP2, we have to be below 300 and maximum loan size. So as Steve mentioned before, individually, you can't get more than 2 million, and as a corporate group, you can't get more than 4 million. So again, speak to your lender, have them walk you through the calculation, and if they're having trouble or you're having trouble, that's where you start, or you can always reach out to us. But this is definitely an area, again, where we're finding there is a little bit of inconsistency across the board.
Number 8, what method of accounting should I use to compute the 25% revenue reduction? So if you were to go to the handouts, took a look at the FAQs that the SBA put out, there is some information about accounting methods, and pretty much it says that you should use the accounting method that you're using. So if you are on a cash basis, you should use cash basis. If it's the accrual basis, you should be the accrual basis. Now we could probably argue if you're on the cash basis for tax purposes and accrual basis for accounting basis, financial statement basis, there might be a difference, but there is a recommendation of being consistent. And obviously, if you're trying to fudge the numbers, that's not going to get you anywhere. So accounting methods, it's going to depend on what method you actually are using.
So I will take on number 9. Will the SBA use hindsight as part of the loan forgiveness review process? We hope not. While some borrowers did receive the loan necessity questionnaire if your loan exceeded the $2 million threshold, our position and our understanding from communications that we received is what was going through your mind at the time you applied for the loan. Did you need the money then? And make sure that you're able to document that, going back to some of the examples that Josh gave earlier in terms of measuring economic uncertainty. But this is something you're going to want to be able to show in case you do get examined later as to why you needed the loan at the time, not necessarily what is happening now.
Number 10, how will I know if my loan has been forgiven? Will the bank send me documentation? So from the folks that have actually been forgiven, we do have, I think we have the answer to this. The SBA will notify you that the loan has been forgiven and may come through the bank. I'm not sure if it's going to come with gold embossed letterhead, but you will be notified by the SBA that the loan has been forgiven.
Okay, number 11. Could maternity leave and other types of leave create a 25% salary reduction? And again, precursor here, Todd is going to go through the salary reduction and FTE reductions, but our position would be that a leave would not create a salary reduction so much as it could potentially create an FTE reduction, in that when somebody goes on leave, their salary is not being reduced, it would be their hours that are being reduced. And then because there's more exceptions and safe harbors and whatnot associated with FTEs, you have some more leeway to hopefully work around that to see if you will be able to avoid any negative impact on your forgiveness. So in short, the answer is no, it should not create a salary reduction.
Okay, what figure should I include for payroll costs on line 1 of the loan forgiveness application? You should include all of the eligible payroll costs. Yes, all the eligible payroll costs should be included on that line, even if it exceeds the loan balance. That is the way the instructions read.
So will the state taxing authorities treat PPP loan forgiveness and the corresponding deduction similar to the IRS? That's a great question. And this is a moving target, if you will. And while we do have in our handout section the PPP state conformity treatment, this changes all the time. And our understanding is actually this may have changed again. So while we do have a state conformity treatment chart in here. We will let you know after this webinar if that has been updated, and we'll provide you with an updated chart, but this is something you're going to want to pay attention to because it really depends upon the state and the type of entity that you have. New York, for instance, just released guidance that both C Corps, pass-through entities, individuals, the treatment will follow the way the IRS does it. New Jersey exempts the income, but there's a bill in front of the governor as to whether or not the expenses will be deductible. So again, back to what I was saying earlier about potentially extending your return if you happen to be a New Jersey taxpayer or other taxpayer, definitely something you want to consider, but something we're paying attention to, the AICPA is paying attention to, so be on the lookout. And as I said, guidance changes all the time.
Okay, how will PPP loan forgiveness and the related expenses be reported on the financial statements? So again, these are ordinary course of business expenses. They're reported as usual, and to the extent that you have received forgiveness or have elected the international accounting standard, then the relief of liability would be shown as a gain on extinguishment, relief of PPP liability, again, most likely shown as another income. Question 15, does the timing as to when the borrower has applied for forgiveness and or the $2 million threshold impact the financial statement treatment? So the answer to this is no. Again, you're going to follow either one of the two prescribed methods, which we discussed previously. But again, I have seen some financial statements include wording that the borrower, again, depending on the timing of when the financial statement is issued, that the borrower, has moved forward for forgiveness, intends to move forward with forgiveness. So you do have the ability to tweak your footnotes to give a more accurate description of where you currently sit if you so choose. Will second draw PPP loan applications impact the 2020 financial statements? The only real impact I would see would be a subsequent event disclosure, similar to when we had our 2019 financial statements and the loans were received, April, May. So again, it would only be a subsequent event footnote. Will there be separate financial reporting for expenses that are extraordinary versus those that will be recurring? Actually believe that the extraordinary treatment is no longer in effect. Again, I would use the footnotes to really depict changes in business. Again, the footnotes, you have the ability to, as long as it's within the standards and guidelines, to kind of gives you a chance to explain your situation. So if you do have large costs as a result of COVID, that maybe you don't foresee, as being part of your continuing operations. And I guess that really is the overarching question is, we're spending all this money on PPP, but is that something that really will continue for the next 5 years, 10 years, 15 years? Again, I would use the footnotes there as your friend, especially if you think you have a really some large expenditure that maybe you just want to indicate separately to a potential reader of the financial statement.
I will take the next two, 18 and 19. Will the process for forgiveness differ between first draw and second draw loans? Other than the loan thresholds, we're hoping that the considerations are done, or the process is similar in that it will depend upon, again, the economic necessity. There are different requirements for first and second draw loans, but presumably the process that the SBA and the lenders undertake will be the same or similar. Next question, is it possible to receive forgiveness for one but not both rounds? And I would say the answer to that is yes. I think, again, you are, if you can get through the mechanical test of the second draw that Josh mentioned, there's still the economic uncertainty question that needs to be answered. And borrower situations could be different when they received round one versus round two. So I think the answer to this one will be yes, but it really, again, will depend on your specific situation.
Yeah, Steve, I think that's a great point. I know that's a lot of conversations we've had especially, and I think it was brought up before about, the SBA using hindsight and being able to look back. But sure, we're in a little bit, look, although times are still very much uncertain, we're in a little bit of a different place today than when we sat back in, April when we were doing this for the very first time. So question 20, when should a company that receives second draw funding apply for first draw forgiveness? So and just remind everybody that they have 10 months from the end of their covered period to apply for forgiveness. If we've seen anything materialize over the last few months, it's that, it makes sense to apply for forgiveness for your first loan. Again, the one real factor that's still kind of hanging over people's heads, and I think Todd's going to talk about it in a minute or two, is if I'm over 2 million, and what does the audit process look like and timing of that? I think that's really the only hesitation still for applying for forgiveness. But for everybody else who's received round one and spent it, doesn't hurt to go forward.
Okay, 21. If I use lender A for first draw funding and lender B for the second draw funding, will this impact forgiveness? We don't believe it's going to be a problem if you use two different lenders for the different loans. It shouldn't impact your forgiveness just because you use different lenders. Number 22, when should I apply for a second draw loan? Should I wait until we might have more business and thus increase my odds of spending the funds on forgivable costs? So folks, the first loan and the second loan was first come, first serve. So the conclusion I would draw is that if you do want to go for the second draw loan, you should probably apply if you are eligible for it and if you think that you could use that money rather than waiting. 23, can I use the new non-payroll clause for first draw and second draw loans? So I can read this question more than one way. If you're asking the question, can you use the new non-payroll cost that now it's been clarified that they've extended and expanded what those non-payroll costs are, you could use that for both the first draw and the second draw loans, but obviously you can't use the same non-payroll costs, the exact same ones for both loans. 24 is the scary question. What does an SBA audit entail? And will the audit threshold increase if there is a second draw loan? We don't really know the answer to exactly what the SBA is going to require in an in-depth audit. I mean, perhaps we could speculate based upon audits that they've done in the past, but we don't know what they're going to actually be doing. And as far as the audit threshold increase, that's a great question. I know that some folks kept their number under $2 million because they didn't want to be exposed to a possible in-depth review. I don't know if by getting an additional loan and you go over that 2 million, it increases. But in any case, when you have multiple activities, transactions, it does increase your risk of some type of audit. So I guess we'll find out. I haven't heard of any audits done yet. Josh, you're taking 25.
I'll take this one actually, Todd.
Okay, Steve, you take
At first pass, I did not receive the full 10,000 EIDL advance, the grant. Am I entitled to receive the remaining balance? There is a limited opportunity for borrowers in low-income communities to basically get the difference between what you initially received and the full 10,000. So if you are in one of those communities, you can reach out to the SBA to try to get that, but there is a limited opportunity for only those borrowers.
26, can you go over the FTE reductions, salary reductions, and safe harbors again? Sure. So folks, we're going to go through this again, and you will have this in your slide deck. So let's talk about the FTE reduction exceptions. Any positions for which the borrower made a good faith written offer to rehire an individual or who was an employee on February 15th, 2020, and the borrower was unable to hire similarly qualified employees for unfilled positions on or before December 31st, 2020 for a PPP loan made before December 27th, 2020, or the last day of the covered period for a PPP loan made after December 27th, 2020. Second, any positions for which the borrower made a good faith written offer to restore any reduction in hours at the same salary or wages during the covered period, and the employee rejected the offer, and any employees who during the covered period were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours. It's the FTE reduction exceptions. Next slide. Got two safe harbors. Borrower in good faith is able to document that it was unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, 2020, due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020, or for a PPP loan made after December 27th, 2020, requirements established or guidance issued between March 1st, 2020 and the last day of the covered period by the Secretary of Health and Human Services, the Director of the Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19. That's safe harbor number one. Safe harbor number two, the borrower reduced its FTE employee levels in the period beginning February 15th, 2020 and ending April 26, 2020, and the borrower then restored its FTE employee levels to its FTE employee levels in the borrower's pay period that included February 15th, 2020 by not later than December 31st, 2020 for a PPP loan made before December 27th, 2020, or the last day of the covered period for a PPP loan made after December 27th, 2020. Salary reductions. This is the 25% salary reductions. Reduction in excess of 25% of an employee's salary or wages, new employees and/or each existing employee who was not paid more than $100,000 annualized in any 2019 pay period. The borrower must reduce total forgiveness amount by the total dollar amount of the salary or wage reductions in excess of 25% of base salary or wages during the covered period as compared to the most recent full quarter before the covered period. The reduction calculation is performed on a per employee basis. And to ensure that borrowers are not doubly penalized, the salary wage reduction only applies to the portion of the decline that is not, I repeat, not attributable to the FTE reduction. So we just went through all that quickly, but you'll have it in your slides. That's probably our most frequent question that we were asked. All right. Next question for the last polling question, which NFL team has the most Super Bowl wins from 1967 through 2020? Is it the New England Patriots, Pittsburgh Steelers, the New York Jets, or both A and B? Poll is open. Let's see you cast your vote. And this is according to the great supermind Google. I did have some people fact check this for me, so I do believe I know the answer to it. Ask Josh and Steve. I'm not a sports guy, so I needed the help of Google. But was it the New England Patriots, the Pittsburgh Steelers, the New York Jets, or both A and B? Going to give you another second or two. Okay, gonna count down. 5, 4, 3, 2, 1. And those people who answered both A and B, at least according to Google, it's that That's the correct answer. New England Patriots and the Pittsburgh Steelers each have 6. Unless someone is going to tell me otherwise, I'm going with Google. Okay, as we're wrapping up, just want to let you know we still have the loan forgiveness tool. And if you're struggling right now trying to apply for forgiveness, we do encourage you to reach out to us. There is a tool that we've been using to help our clients. And if you're interested, please let us know through the COVID-19 email address. And with that, go to the last slide. This is the end of our presentation. We will have another recovery update for you. We don't know when. It's when more information comes out. Please feel free to send us any questions that you have on COVID-19 at sacsllp.com. And if we didn't answer your question, reach out and we'll be happy to give you a phone call or respond another way. So bid you adieu. Thank you for being part of the webinar and enjoy the Super Bowl. Take care.